Good afternoon, everyone. We expect a lot of energy across the day, especially by the participants. So let's try that again. And everyone joining in from the universities, cheer up your friends. Good afternoon. I hope all of you are excited for today's proceedings. A warm welcome to the grand finals of the CFA Institute Research Challenge Sri Lanka for the years 2025 and 26. The CFA Institute Research Challenge is an annual global competition that provides students across universities with hands-on mentoring and intensive training in financial analysis and professional ethics. Now, the CFA Institute Research Challenge, hosted by CFA Society Sri Lanka, offers the participants of this competition the unique opportunity to learn from leading industry experts and compete with peers from the world's top finance programs. The response for this year has been remarkable, with 38 applications received from undergraduate teams across the island and 27 teams qualifying to participate from the pre-screening rounds, reflecting the growing interest in the competition. And I've seen this grow from years, and it's great to be here for the 19th edition. Before we move on, there is a small video that highlights the research challenge so far, so hope you enjoy.
For over 75 years, CFA Institute has been providing finance education for investment professionals, advancing ethics, market integrity, and professional standards in the industry, which supports better investor outcomes that contribute to economic growth and development. Our role in effecting positive change in an ever-changing world is more important now than ever. Our focus areas will allow us to meet these complex challenges and realise opportunities. We will influence and shape the industry, develop education and lifelong learning, and continue supporting our community. We are fully committed to growing the profession by attracting a diverse next generation of talent, evolving our flagship CFA program to ensure relevancy, to prepare us for today and the future, developing research, partnerships, and new member experiences to drive greater industry knowledge and impact, building credibility and trust by setting new industry codes and standards. We lead the investment profession globally by promoting the highest standards of ethics, education, and professional excellence for the ultimate benefit of society. We are CFA Institute.
There you go, ladies and gentlemen and participants, a sneak peek of the CFA program and what's to come as well. The CFA Society Sri Lanka is proud to host the 19th edition, like I mentioned before, of the annual local leg of CFA Institute's Global Research Challenge. This year, the event has been made possible due to the support of our platinum sponsor, the Colombo Stock Exchange, our learning partner, Equity Analytics, and our banking partner and venue partner, HNB, and for hosting us at their venue here this evening, together with all our other sponsors, partners, and volunteers. So once again, welcome and good evening to all of you. To do the honors of welcoming you all formally, I'd like to invite Rashmi Piris Parnavitarana, CFA, President, CFA Society, Sri Lanka.
Good afternoon to all of you. Our chief guest this afternoon, Senior Professor Harendra Disa Bandara, Chairman of the Securities and Exchange Commission of Sri Lanka. Our guest of honor, Jehan Jayewardenepura, who will be with us shortly, the country head of Equity Analytics. Senior representatives from Colombo Stock Exchange, our platinum sponsor. Board members of CFA Society Sri Lanka. We are happy to have Supun Dias, Executive Vice President and Head of Network Business of HNB PLC, and other senior representatives of HNB PLC, our banking partner and our venue partner. senior representatives of Digital Mobility Solutions Lanka PLC, the subject company of this year's Research Challenge, members of academia from universities, representatives from our valued sponsors and partners of CFA Society Sri Lanka, CFA charter holders, judges, industry mentors, faculty advisors and graders, and last but definitely not the least, the university teams participating in today's competition and all distinguished guests. On behalf of CFA Society Sri Lanka, it is truly my pleasure to welcome you all to the CFA Institute Research Challenge Sri Lanka 2025-2026 finals. First and foremost, I would like to warmly welcome our chief guest, Senior Professor Disa Bandara. Thank you for accepting our invitation. Your presence today underscores the importance of initiatives like this, which seeks to strengthen the analytical capability and professionalism within our capital markets. A warm welcome to guest of honor Jehan Jayewardenepura, like I said, who will be joining us shortly, the country head of Acuity Analytics. We are thankful to the continued support from Acuity Analytics and their training team towards elevating the standards of this competition throughout the years. Today is more than the culmination of a competition. It is the celebration of a journey shaped by intellectual curiosity, discipline, teamwork, and the courage to engage with the real world of investment analysis. Over the past months, each of you has stepped beyond the lecture halls to assume the role of a professional analyst, building models, analyzing disclosures, testing assumptions, and ultimately crafting and defending an investment recommendation. Along the way, you have been guided by industry mentors who represent the very industry that you may be aspiring to join. Through their feedback, you have gained perspectives that definitely extend well beyond textbooks and lecture rooms. How to exercise judgment, how to manage uncertainty, and how to think critically when real capital is at stake. So today, for the 4 finalist teams, it represents another milestone on that journey, presenting before a distinguished panel of judges representing the industry. Today will not just be about technical accuracy, it is also about confidence, clarity of thought, and the ability to articulate and defend your theses under scrutiny. These are also the very capabilities that will distinguish you as future professionals. Their stories remind us that this is far more than a competition. It is a platform that can shape careers and open doors. If this journey to date, from everyone who has participated so far, has sparked an interest in pursuing a career in finance, I encourage you to consider the CFA program. Pursuing the CFA program will be one of the most valuable investments you can make in yourself to accelerate your career in finance. It will provide you a deep technical knowledge, but not just that, also give you an ethical foundation and professional credibility that the industry values. For many who came before you, the Research Challenge has been the first step on that path. The impact of this competition has been made possible through the generosity and support of our sponsors and partners, who recognize that investing in young talent is investing in the future of our financial ecosystem. We're deeply appreciative to our platinum sponsor, Colombo Stock Exchange, and the CSE representatives here for the continued collaboration and support for the Research Challenge throughout the years. We are also very thankful to HNB PLC, our banking and venue partner, for graciously hosting the CFA Research Challenge finals. The success of this competition is driven by an extraordinary community of volunteers, judges, mentors, faculty advisors, graders, and many others who have contributed their time and expertise throughout this competition. And this event would definitely not have been possible without the commitment and tireless efforts of the SLRC organizing committee led by Travis and our society staff members, Sandunika, Juanita and Minura, and our CEO, Arun Alvis. So as we begin today's final presentations, let us celebrate not only excellence in analysis, but also the shared commitment to raising standards within our profession. To all participating teams, I extend my best wishes And regardless of today's results, I hope you have already gained something of lasting value. At the beginning of my address, I spoke about the journey you have embarked on. If this competition has played even a small role in sharpening your technical skills, strengthening your critical thinking, and if you step into your first professional role, then this experience will undoubtedly mark a defining milestone on your journey. Thank you, and I wish all finalists the very best. Thank you.
Thank you very much, Rashmi. And now we move on to introducing our eminent panel of judges. Starting off, we have our first judge of this year's competition, Dr. Buddhika Fernando, CFA, Assistant Director, Equity Analytics, Nilendra Veerasinghe, CFA, Chief Strategy Officer and Chief Strategy and Financial Officer of SLIIT Business Solutions PLC, and Trisha Piris, CFA, Head of Research, Capital Alliance. A warm welcome and thank you to all three of you. We are very excited to hear from you at the end of the presentations after the teams are done. Let me also thank our sponsors, without whose support this event would not be possible. Starting off with our platinum sponsor, the Colombo Stock Exchange, our gold partners, Deloitte and First Capital, silver partners, HNB Investment Bank, Capital Alliance Group, CT Smith, NDB Capital Holdings, Senfin Asset Management, UserBiz Sri Lanka, and knowledge partner, Equity Analytics, banking partner, HNB PLC, print media partners, the Delhi FT, Daily Mirror, and Sunday Times, text messaging partner, Textware, candidate resource partner, Alpha Business School, and our supporting partner, EduLoan. With that, ladies and gentlemen, we are ready to move into the competition. However, before we move into the competition, I would like to introduce you to the 4 finalist teams in the CFA Institute Research Challenge Sri Lanka for 2025 and 26, who will be competing today. 4 teams. Congratulations to all 4 teams who have made it through to the finals. They stood out from 20 plus teams who participated during this year's edition of the competition based on the research report they did on the subject company of this year's company. That's Digital Mobility Solutions PLC, or more fondly known as PICME. Now, earlier in the day, the team had drawn lots, and the first team who would be presenting their investment case study today on Digital Mobility Solutions PLC will be the University of Colombo Team C. And the team comprises of Lochana Pereira, Dion Gomez, Deumi Shenya Chandrasiri, Kemini Suryage, and Subhanu Disanayaka. A big round of applause, ladies and gentlemen, as we welcome them onto the screen.
Magic of PICME, with the vision of joyful mobility for a better life. Greetings from the University of Colombo. We issue a buy recommendation on PICME with a 12-month target price of 207 rupees, representing a compelling upside of 29.6% for the last close of 159 rupees and 70 cents. Position yourself to hail the upside and ride the growth. Our buy recommendation is supported by 3 core investment pillars. Number 1, the untapped market upside. Number 2, the hyperlocal edge. And number 3, the shareholder return engine.
Founded in 2015, PICME is a software company. It has grown from single service into 7 vertical ecosystem, adding 4 new verticals in the last 4 years. Majority of their revenue comes from ride-hailing, which is 84%, followed by delivery and events. PICME holds 70% market share in ride-hailing and 40 to 45% in food delivery. Currently operating in 16 districts, PICME continue to expand nationwide. We identify few catalysts for demand and supply. Beyond our core analysis, our survey highlights affordable pricing as demand catalyst and rapid gig economy trend as a supply catalyst. As dual catalysts, we identify rising digital adoption and urbanization, where revenue is driven by both demand and supply side catalysts. Looking at the competitive landscape, Pygmy's main competitors are Uber and Hellogo. Looking at the competitive landscape, Pygmy is leading with wider coverage, stronger user base and driver base, and ability to offer multiple services to same user. Driver boost incentives and early adoption of competitive bidding sets Pygmy apart from competitors.
We move on to our first thesis, the untapped market upside. It is clear that Pygmy is currently at a growth stage with significant potential to capture further market share. The BCG matrix positions urban ride-hailing as the sole cash cow. This strategic positioning underpins a 32.4% 5-year forecasted revenue CAGR, mainly driven by two key metrics, the increasing unique user base and increasing average GTV per user. Looking at numbers, Pygmy's revenue growth is primarily driven by a 2.8 times increase in unique users, supported by island-wide expansion, alongside a steady increase in average GTV per user, reflecting platform synergies. This illustrates Pygmy's successful revenue growth story, leveraging market under-penetration, island-wide expansion, current leadership, and first-mover advantage.
Pygmy is the market leader of Sri Lankan mobility. To understand the scale of the opportunity, look at the current volume contribution. A staggering 81% of volume comes from just the Western province, which is home to 3.7 million individuals in the target age group. In contrast, 9.1 million individuals outside Western province only contributed 19% of volume. We have analyzed these 9.1 million individuals and we have noted that their digital literacy rates have increased by 31% and their per capita GDP has increased by 24% from 2021. We have mapped Pygmy's regional expansion using a provincial maturity map, categorizing each province from emerging to mature, considering three factors, which are population, affordability, and supply readiness. This creates a massive first-move opportunity that Pygmy has exploited in their regional expansion, covering more provinces and being 1 year early than their competitors. Next up is events. Our scenario analysis that we built for events suggests that even with a moderate adoption, the annual impact on GTV could reach up to 3.6 billion rupees. We have calculated this by analyzing peers and taking some conservative assumptions. Pygmy Events is not just another new revenue stream, it's a platform synergy play.
Moving on to our second thesis, Pygmy maintains a strong local edge with first-mover localized innovations along with a highly competitive technological moat. This has resulted in a strong network with drivers growing by 34% and merchant partnerships by 55%. This scale enables competitive pricing, allowing Pygmy to operate as the high-volume, low-cost lead in the market. According to the analysis we conducted, private vehicle ownership remains costly due to fuel and financing pressures. This cost advantage positions Pygmy as the most affordable and convenient mobility option for everyday transport. Based on our survey, Pygmy emerges as the clear market leader, with over 70% naming it as their first choice ride-hailing app. Affordability and driver availability are the strongest decision drivers, reflecting lower prices than its competitors. This value proposition translates into high loyalty, with nearly 99% of users indicating their willingness to continue using Pygmy.
Next, we move on to our third thesis point. Pygmy operates in a non-linear business model with a fixed cost dominant cost structure, facilitating long-term economies of scale. With this business model, Pygmy benefits from a high degree of operating leverage, translating revenue growth effectively to the bottom line, resulting in margin expansion. Another unique characteristic of Pygmy is its asset-light platform-centric business model, where CapEx remains relatively low to its revenue, as seen through the declining CapEx to revenue ratio. 62% of non-current assets comprises of intangible assets by FY27 as per forecast. This translates Pygmy into a cash-rich business model supporting dividend payments even during the growth stage. Ultimately, these dynamics translate the 44.7% of ROE in FY25 to 56.1% of ROE by FY27. Our forecast resulted in a 5-year EPS CAGR of 42.4%, a 5-year DPS CAGR of 34.3%, and a 50% dividend payout by FY27. This completes the investment story of growth, efficiency, and returns.
Pygmy maintains an asset-light balance sheet with a debt-to-equity ratio of just 12.3%, which is 8.4 times lower than the global peer average of 103%, including global giants like Uber, Grab, and Lyft. The interest coverage ratio is projected to strengthen from 38 times in FY25 to to 44 times by FY30, while the current ratio is expected to nearly double during the same period. PICME's efficiency is further evidenced by the high free cash flow conversion rate, where approximately 2/3 of its profits turn into cash.
Moving on to our ESG analysis, PICME scores a strong combined score of 82% based on CA Code of Best Practices and Refinitiv standards. Despite being a local company, PICME performs closely to its global peers, especially in social and governance. PICME transforms eco-friendly mobility through strategic EV partnerships and AI route optimization. In the social pillar, PICME has strengthened its gig economy with over 17,000 training hours and a 75% retention rate. From initiatives like Nanapahane education to disaster reliefs, PICME reinforces its strong community impact. In governance, PICME scores 82.2% based on CA Code of Best Practices. This is supported by 6 independent committees along with a highly experienced board of a cumulative experience of over 250 years. However, the board gender diversity remains an area for improvement.
Moving on to the valuations, our target price of rupees 207 is derived from a blended approach. We have given an 80% weight to our DCF in order to capture the long-term cash generation potential of PICME, and the remaining 20% is allocated to relative valuation. Our DCF model is built on conservative yet realistic assumptions, where we have calculated a WACC of 15.7%. We conducted a bull-bear scenario analysis by changing key variables such as EBIT margins, take rate, and terminal growth rate, where our bear target price landed at a 13% downside. To ensure the rigor of our recommendation, we stress tested our model against some key variables. Our sensitivity analysis that we did for our macro variables suggests that our model is sensitive to WACC. And we ran a Monte Carlo simulation using 10,000 simulations, where we got a mean target price of rupees 210 and a minimum price of rupees 162. Crucially, throughout all our stress testing scenarios, the buy recommendation remained unchanged, reinforcing the significant margin of safety.
PICME is a software company listed under transportation sector. Therefore, there aren't any local valuation peers for PICME. Our relative valuation focuses on regional and global peers, where we use 2 multiples, EV to EBITDA and EV to GTV, which is an industry-specific multiple. We have discounted our global peer multiples by 35% in order to adjust for differences in economic factors. We gave each multiple a 50% weight in deriving the relative valuation price, in which 20% is bought a final target price of 207 rupees.
Next, we move on to the investment risk. From several risks identified, we focus on 3 key material risks to our investment thesis, prioritized based on probability and impact. First, intensifying competitive pressure and price wars. Secondly, scaling into new verticals and geographies. And thirdly, the high dependence on operating leverage. However, with strong brand equity, scalable infrastructure, and diversification across verticals, we believe PICME is structurally positioned to manage these downside risks. Dear investors, with an untapped market upside, a proven hyperlocal edge, and PICME's shareholder return engine, Digital Mobility Solutions Lanka PLC is the premier gateway to Sri Lanka's digital future. We reiterate our buy recommendation with a total return potential of 31.4%. Invest now to hail the upside and ride the growth. Thank you.
Congratulations on a very well presented investment thesis, which was really great. So you started off, can I see the slide where you presented the interest coverage ratio of 30 odd times? Do you think this is the best use of their cash? What is PICME going to do with all that cash? And how do you think the investor will be best served with all this cash that you're talking about?
PICME has a lot of cash in their balance sheet at the moment. So based on our calculations of the free cash flow per share analysis, we have concluded that they have a cash balance of 3.69 per share as of the forecast of FY26. So based on that, PICME can use that cash to incorporate them into the island-wide expansion activities of their business, as they have a rigorous plan to expand island-wide with all their verticals, and then they have the ability to distribute that cash in terms of dividends, which they have shown in the last year. As a growth company, they have issued dividends. So they can utilize that cash into fund their island-wide expansion activities, as well as the payment of dividends. And in terms of competition, they have some new competitors entering in the market, and they can utilize that cash to compete with those competitors by reducing their take rates and giving more driver incentives and passenger promotions to boost their demand. So in terms of the information perspectives, they can use those funds to these three methods as mentioned.
If I look at typically, PICME being a kind of a marketplace model, you mentioned both the demand and supply are in favor. My question is, if you were to critique your own narrative, which side of the marketplace, demand or supply, would you be more concerned about, and why?
Yeah, so in terms of the catalysts, we believe that the demand side is the most important. So in terms of those catalysts, we have the digital adoption, urbanization, where the users are increasing. So this is the sensitivity analysis we did for the number of users and average GTV per user. With the increase of unique users, PICME's value is increasing. So to answer your question, basically we believe that the demand side is what drives.
Just to lean into that, so if you're more bullish on demand, what are your assumptions on the take rate and the unit economics as PICME moves into other untapped geographies within the country? During the forecast period, is your take rate constant, coming down? What happens to the unit economics?
So the take rate, in terms of competition, we have accounted that the take rate will, the take rate can come down. But in terms of your question, the question was about?
What are your assumptions on the take rate? Is it staying constant throughout the period?
Our base case assumptions were that they would go, basically they would be constant over. But in terms of our bear case, we have applied basically a discount for that take rate with the entrance of competition as well as other sort of factors. And the take rate will increase in our bull case, where the other every side of the economic factors help in PICME to move forward.
Thank you.
I think in your second point, you mentioned that PICME is priced kind of cheaper compared to some of its competitors, right? And that it's its local advantage. But what happens if, for example, Uber decides to use its global balance sheet to come in and cut their prices down? What do you think is a specific feature of the PICME app that would prevent users from switching, particularly as you found in your survey as well, that people are very sensitive to prices?
In terms of Uber, PICME has some point of differentiation in their app inbuilt to PICME, which are specific. So in terms of their verticals, they have the events vertical, and they have the trucks, and they have courier, which are unique to them in terms of competing with Uber. And then we have done a sensitivity to the take rates, where PICME can lower their take rates in order to fight that competition, and that impact to the EBIT margins are relatively lower. So our analysis on the take rates have been, we have taken a take rate of 10.3 for our valuations, and we have reduced that take rate by 4% to analyze the impact on their margins. So even if the take rates drop by 4%, still their margins are at around 18.8, which are still strong for a growth company. And they have the potential even to use that cash balance to give them incentives, driver incentives and driver incentives and user promotions. So in terms of that will ultimately impact the take rate. But in terms of our analysis, we have reduced the take rate just to look at the margin impact, and we have concluded that even with a reduction in take rates to counter the competition, they still have a strong margin potential.
To add more color to that, basically in terms of Uber operates in multiple regions. So for Uber, Sri Lanka is just one market out of their many markets. For PICME, this is it. Therefore, Therefore, we believe that PICME has to innovate. And yeah, in terms of the technical side,
and also adding on to, we looked at their PICME engineering block where they have analyzed about their technological stuff. So there we have seen that the zero data data layer, which they use the SLIIT and Redis with Lua scripting technology, where they not like Uber, where they have to send their data to the central server, but here PICME runs the matching logic inside the database. And also that the inconsistent data networks in Sri Lanka, we don't always have 5G everywhere. And also with PICME expanding to other regions, we believe that their data, like the technology will help with that.
You mentioned the word free cash flow engine. Sorry? For a company to be a free cash flow engine, when you say that it is so, the biggest question that needs to get answered is capex intensity. You're forecasting capex intensity to come down from about 15% to 11 and then stay constant. With all the technology changes that's going on, what makes you sure about your capex intensity assumptions?
So basically, we have incorporated that capex into our model. So that graph was basically the capex to revenue graph, and we have taken the assumption that PICME is going to expand into other level 2 and level 3 provinces, which will have a positive impact on their revenue. And based on, yes, you can see the capex breakdown, and we have maintained a 50% contribution to our capex so that they can finance that capex. And that graph was really due to the capex to revenue ratio, where the revenue of PICME is growing at a faster rate due to the increasing average GTV and the 2.8 times increase in unique users. So we have actually accounted and incorporated that increasing capex to our model. And yes.
And also to add some color to that, we have seen that from their technology perspective, that lately they have been moved to the Jetpack and it's for Android phones and Swift UI Compose. Like they have mentioned that they have moved to a clean architecture where they can basically faster feature releases and also like a smooth interface that even on budget tier phones can use, and also some more technological stuff that makes the capex will increase, but not in an increasing rate like now.
All right, I guess that concludes the question and answer session. Congratulations again on a very good presentation, and I congratulate you on having anticipated many of the questions that the judges raised. That shows that you have done a lot of thinking and analytical thought has been given to your presentation. Well done again indeed, congratulations.
That was the University of Colombo Team C presenting as the first team. Did they get their take rate assumptions right? Did they assume no one from the global ride-hailing platforms will enter the local market? Did they expect that and preempt that properly? Let's find out with the judges' comments. But for now, we have our second team. Ladies and gentlemen, a warm welcome and a big round of applause to the University of Kelaniya Team A, comprised of Mohammed Faham, Amani Najumiddin, Lumini Liu, Pujani Bandara, and Situmi Medungoda. Good luck to the University of Kelaniya Team A. All the best.
Good afternoon, ladies and gentlemen. Fragmented transport no longer meets rising mobility demand. Globally, integrated digital platforms are the solution, and in Sri Lanka, PICME is leading the shift. We recommend a buy on PICME with a 12-month target price of 198.81 rupees, reflecting a 27.9% upside through a DCF valuation supported by a relative and ESG-adjusted valuation. Our conviction is underpinned by 3 core pillars: PICME's regional expansion and platformization strategy, doubling customer lifetime value; PICME's front-runner position to capitalize on government-led transport initiatives; and its defensible competitive moat amplified by platform diversification, superior technology, a fortress balance sheet, and high user satisfaction. PICME, Sri Lanka's leading homegrown on-demand service platform, dominates ride-hailing with a 70% market share, operating in delivery and expanding into experiences. Sri Lanka's transportation industry is undergoing a digital transformation as weakening public infrastructure and low vehicle affordability drive a shift toward ride-hailing. The industry is expected to grow to reach more than 5 million users by 2030.
Moving on to our first catalyst, Sri Lanka is at a digital transition stage. Nearly half of the population is tech-savvy and adoption is accelerating beyond major cities. Based on this digital adaptation, we identified 3 regional tiers in Sri Lanka using K-means clustering. Tier 1 districts are digitally saturated, where Pick.me dominates. Tier 2 shows moderate adoption with limited competition. Tier 3 is the fastest growing in digital services with virtually no competitors. Pick.me is the first and dominant mover into Tier 2 and Tier 3 regions, evident through expansions into Kegal and Jaffna. This strategy fast-tracks unique users to grow from 1.5 million to above 4 million by 2030. As users scale, Pick.me executes a platformization strategy, which means it leverages ride-hailing as the entry point and expands into delivery, experiences, and related services. This allows platform movements to grow at a 32% CAGR with higher monetization. At the user level, our customer-based corporate valuation model forecast lifetime value per unit compared to cost of acquisition will increase from the current level of 5 times to 8 with this platformization strategy. Together, this delivers a 30% revenue CAGR, nearly 3 times operating leverage, 11% margin expansion, 5 times EPS growth, and a 60% shareholder distribution.
Moving on to our second catalyst, the government estimates over 2 billion public rides, encouraging the development of 15 multimodal transport hubs, expanding the public transport capacity. Globally, 1 in every 7 ride-hailing trip is generated near these hubs driven by first and last mile connectivity needs. Since public transport is a substitute to ride-hailing, this may appear as a threat. However, every day more than 500,000 commuters enter Colombo from across the country. This boosts the short-distance urban travel. Thereby, we forecast the ride-hailing market value to grow 174% by 2030. Importantly, 6 of these planned hubs are located in Tier 1 region, where Pick.me already holds a dominant market position. Pick.me's 5-kilometer average trip distance and its 13:1 user-to-driver ratio demonstrates its structural advantage in capturing the incremental first and last mile demand created by these hubs. As a result, Pick.me converts an industry threat into an opportunity and is well positioned to capture the next phase of mobility demand surge in Sri Lanka.
Moving on to our third catalyst, Pick.me holds a defensible position in the Sri Lankan passenger mobility market, despite low barriers to entry. This is driven by a 4-pillar moat. Its diversified platform across ride-hailing, delivery, and experiences increases user stickiness and resilience to demand shifts. Technologically, Pick.me's hybrid algorithm plus bid model delivers better matching efficiency and more stable pricing than peers. Smart Mobility Laboratory, a collaboration between Pick.me and Sri Lankan universities focused on improving route efficiency, has already reduced passenger wait times by 11%. Strong cash results provide pricing flexibility and raises barriers to entry. We conducted an independent survey covering both riders and drivers with satisfaction scores calculated across 5 key areas for both groups. The results confirm an industry-leading satisfaction of 86% among riders and 84% among drivers, outperforming peers and highlighting a strong, self-reinforcing network effect. Together, these factors create a durable competitive moat and position Pick.me as a leading and irreplaceable player in the Sri Lankan mobility ecosystem.
Pick.me is undergoing a margin expansion phase powered by scale and operating leverage. As platform activity compounds at over 30% annually, incremental revenue flows through largely a fixed cost base, with unit costs declining through long-term cloud partnerships. Operating margins approach 40% structurally above their peers, driving ROE beyond 70% through efficiency and leverage. Therefore, Pick.me is able to convert growth into structural profitability and superior shareholder returns. Further platformization strategies generate higher revenue relative to incremental capex, driving free cash flow growth of 79%. With limited incremental capex requirements, this supports a 60% dividend payout, ensuring that shareholders directly realize their returns. Importantly, this growth is underpinned by balance sheet strength. Liquidity improves by 1.5 times, and operating cash flows grow at a 37% CAGR. With conservative leverage, this provides meaningful downside protection and strategic flexibility, thus reinforcing PICMI's competitive moat and positioning PICMI itself as a barrier to entry.
Our buy recommendation is driven by a 27.9 upside with a target price of 198 rupees and 81 cents, which was derived using a DCF approach. A relative valuation and an ESG adjusted valuation further supports our recommendation. Our forecast uses a 10-year explicit period to fully capture PICMI's multi-vertical revenue growth, differing segment dynamics, and transitioning into a steady performance state. We also incorporated operating leverage improvements and platform-focused capex that align with user expansion. Free cash flows were discounted using a 16.4% WACC, which was derived using an 18.5% cost of equity and 11.4% cost of debt. Beyond that, 3% terminal growth rate was applied. Given the optimism around consumer spending, we anticipate PICMI's share price to exceed our projection as indicated by sensitivity analysis. As a final robustness check, we conducted Monte Carlo simulation, which reinforces our recommendation by showing 61% of all outcomes ranges above last close price. We also conducted scenario analysis using sets of assumptions, primarily net take rate against competitive pressure, which resulted in a 6 to 5% upside in the bull case and 11% upside in the bear case. We performed relative valuation comparing PICMI with regional peers using EV/GTV, reflecting monetization potential, EV/EBITDA indicating operational efficiency, PE highlighting profitability. By applying an equal weightage, we derived a price of 193 rupees, implying a 25% upside. For impact investors, our ESG valuation, which compares PICMI's ESG score with industry benchmark, resulted in a 38% upside.
We analyze PICMI's ESG performance through Refinitiv scorecard, which indicates that PICMI is outperforming its peers, while external ESG risk indicators shows that its key exposures are well managed. PICMI combines EV adoption with the smarter mobility platform efficiency. Its rent-to-own partnership with LOSC Holdings, implemented through Brown's EV, accelerates EV adoption. At the same time, AI-driven routing minimizes dead heading and driver idle time. PICMI opens safer mobility and earning opportunities for women, expand their income opportunities by formalizing driver earnings. They also help communities during emergencies and stabilize livelihoods. PICMI excels in governance with strong oversight and risk control. This is reflected in 92.6% corporate governance score.
PICMI faces several operational, strategic, and financial risks. Among them, we identified three main downside risks, which is intense competition, service quality and reputational, and driver network reliability risk. However, we believe that this risk can be mitigated through early market expansion, effective grievance handling, investments in app enhancements, and driver welfare programs. PICMI is redefining digital mobility, making every ride a win. So now it is a time to invest in this transformation. Thank you for your time. We now welcome your questions.
Thank you very much for the wonderful presentation. If I can kick off the Q&A with two questions. One is, on the risks, you identified competition as the single most visible risk. If I were to take a view, again I say, if I were to take a view that the biggest competitor to PICMI as government of Sri Lanka, the biggest transportation provider, with all the initiatives that are going in terms of improving rail transport, air-conditioned buses, all of that, what is your view and how would you respond to impact to demand coming from this factor?
Sure. When we take the competitive landscape of Sri Lanka, PICMI and operating industry, Uber is the largest competitor for the PICMI. As you said, Sri Lankan government has allocated around 400 billion to develop the public transport infrastructure. So we believe out of that, 20% of allocated to the passenger ground transport industry. Through that, Sri Lankan government plans to build 15 multimodal transport hubs. So we believe this increase the short distance urban travel. That by PICME's average 5-kilometer average trip distance and its industry standard driver coverage provides a structural ability to capture those demands. And according to the Uber, if we take, Uber is a global business and PICME is a Sri Lankan homegrown business which has localized their platform. If we take PICME's technology itself, they are very much positioned to expand beyond tier 2 and tier 3 cities where Uber doesn't. We can see this the evident Uber in operating only tier 1 city, which is Colombo and Kampaha. So we believe PICME is well positioned to capture the next phase of mobility. Yeah.
Thank you. And my second quick question is linking to where you ended off in terms of the regional expansion. Have you looked at how the lifetime value, LTV, and customer acquisition cost kind of differs as you move regional, tier 2 cities, tier 3 cities?
So yeah, across Sri Lanka, we believe PICME only spends the same customer acquisition cost. So when they're expanding beyond tier 3 and tier 3 cities, as we expected, user growth will be doubled by 2030 from 1.5 million to 4.5 million. There is very little customer acquisition cost. And PICME executes a platformization strategy where they enter as a ride-hailing platform and upsells their other services, which are deliveries and experiences. Through that, their lifetime value doubles through this period with very minimal customer acquisition cost because they don't have to spend extra customer acquisition cost when they're upselling their services. So that drives the revenue and the value acquisition from the.
Thank you. In the first point, I think you mentioned that your user growth really also partially stems from the fact that there's low vehicle affordability. But obviously, as we've seen in the last several months, there's been lots of vehicles coming in from 3-wheelers to 2-wheelers and so on. How have you factored this into your estimates in terms of what you think will happen to the customer base and user growth going forward as a result of more vehicles coming in and increased affordability to some extent?
So we understand that the import restrictions being lifted may seem as a threat because due to in the last 3 years, the company's revenue has grown because of the import restrictions. People have been relying on Uber and PICME and other ride-hailing apps. But what we also see is that due to the 15 multimodal hubs that we have in our second thesis, that is going to increase the ride-hailing demand by increase the ride-hailing market value by 174% by 2030. And because of that, due to PICME's 5-kilometer average distance, PICME is able to capture that market and grow their revenue. In addition to that, if we see over the last 3 years, their revenue CAGR has been around 65% owing to the reason that you said of import restrictions. However, our revenue CAGR of 30% over the next 5 years, even with the import restrictions being lifted, doesn't solely rely on ride-hailing. It relies on all the services that PICME is currently serving as well as they're planning to serve in the next few years.
Just on the last point, I think that you mentioned in terms of the other services that it offers, based on your analysis, do you think that those are additional value creators in terms of margin expansion for the business compared to the platform, the ride-hailing business alone, or does that dilute the value?
So ride-hailing currently contributes to 85% of PICME's revenue, whereas delivery contributes to around 15%, and experiences is just a new vertical that they have added. But according to our forecast, over the next 5 years, we expect that the ride-hailing revenue contribution to PICME's total revenue to reduce to around 71%, while delivery and other verticals to capture that revenue percentage. So in addition to that, we understand that PICME is not limiting themselves to ride-hailing, delivery, and experiences. They're a technology platform who wants to make it a homegrown service. So they will add more verticals into their platform in order to make sure that the Sri Lankans' lives are more seamless through their phones itself.
So adding on to that on your question on the margin expansion. So if you take the PICME, the cost of what they're offering is a digital solution, and the cost of is like the API cost and the server cycles and all. So across the board, with the ride-hailing or the delivery or the experiences, costs remain the same. So we believe delivery offers more margin, more contribution margin, and experiences offers more contribution margin than the delivery, because experiences doesn't use any APIs or any, it's just a record on their servers. So we believe through that incremental revenue, this expands our margin by 11%.
You mentioned that the revenue CAGR was 65%?
Over the last 3 years
Over the
post-crisis.
last 3 years, and that your forecast is over the next 5 years is 30%.
Yes.
Your valuation multiple, the PE you took was around 30. I wasn't sure which time frame that was, but if your revenue CAGR is going to halve, how do you explain the valuation increasing and the valuation remaining stable at least?
So yeah, Pygmy currently trading at around a 32 multiple, if you count the P multiple. So we believe as a Pygmy homegrown company and technology, one of the profitable company which public, where public can invest in that company. So there are only few companies where public can invest in a homegrown technology company which are this much of profitable. So we believe that multiple is sustainable in the future.
One more question if there is time. What is the terminal value contribution in your DCF? How big is it from a percentage point of view?
Yeah, terminal value coming from 52% of the enterprise value coming from the terminal value, and then we have done a extended 10-year forecast, the 48% coming from that.
Valuation that has been attributed to the very strong growth in the tier 1 cities can be sustained when you are moving into the tier 2 and tier 3 cities where the revenue, the economy is smaller, the potential for people to be spending more on transportation is probably less. Convince me that it is still sustainable.
Yes, so Pygmy already dominates tier 1 districts, which includes Gampaha and Colombo, but the dominance mainly comes from ride hailing. And currently they are executing a platformization strategy, which means they enter the market through ride hailing and then would cross-sell their delivery and event products to the same customer. That's how the revenue CAGR comes from this company. So because of that, there is still high potential into those delivery and experiences segments. And also since Pygmy is exploring the other tiers as well, they would be continuously getting revenue from those while maintaining that dominance in tier 1. Even though Pygmy already has dominance in that first tier, through ride hailing, there is still a 40% ride hailing market for them to capture.
Yeah, adding on to that, so if we take the Sri Lankan population, tier 2 and tier 3 itself consist around 78% of the Sri Lankan population, okay? So beyond that, we believe, according to the latest, one of the Sri Lanka largest bank reports, 80% of the online transaction occurs beyond Western province. So there is more market to capture. And then we have, clustered Sri Lanka into three tiers. We have identified that Puttalam and then eastwards, their e-commerce penetration rates are far higher than the Western province. If we take Colombo itself, Colombo's e-commerce penetration is around 60%, while Puttalam and Betikula, if you go, that they go beyond 70%.
Thank you very much indeed for an excellent presentation and for fielding all the questions asked really well. Thank you. Congratulations.
Thank you for team number 2. We next move on to a short video by our platinum sponsor, the Colombo Stock Exchange. Ladies and gentlemen, with that, we move on to our third team for the evening. And give a big round of applause to SLIIT Campus CA Sri Lanka, your third team presenting today. Whilst they're set up, I'd like to, may I invite the team to to take their positions. The team comprises of Indeepa Pereira, Hamid Fardan, Himandi Mehansi, Sumeya Razak, and Baruna Akalanka. Good luck to SLIIT Campus, CA Sri Lanka.
How many technology companies are profitable, debt-free, market dominant, yet still trading at 22.5% discount to intrinsic value? We found exactly one. We are initiating coverage on Digital Mobility Solution Lanka PLC, prominently known as PICME, with a high conviction buy recommendation at a 12-month target price of 192.55 Sri Lankan rupees.
Well, what makes this buy so convincing? Our recommendation is driven by three main factors. PICME's deepening user base and Sri Lanka's rising digital adoption drives sustained revenue growth. Secondly, PICME's scalable platform economics and cross-selling dynamics naturally support margin expansion. And third, PICME has developed a powerful competitive moat, reinforced across multiple dimensions.
PICME functions as the middleman, providing the digital backbone that enables transaction between users, drivers, and merchants through an efficient asset-light aggregator model with 85% of ride-hailing revenue, food delivery with 15%, and events less than 1%. Strategically, PICME closes regional gap beyond Western province into emerging markets, shifted the growth in regional volume contribution from 13% to 19%, proving a scalable island-wide growth potential.
Consider this, PICME is already a market leader, yet it only captured 2.6% of transport GDP, leaving 97.4% market untapped. Internet penetration is rising sharply from 36% in 2020 to projected 67% in 2030, expanding the user base. Meanwhile, 2025 import relaxation triggered an 8-fold recovery in vehicle registration, boosting the drivers and the riders at once.
The market opportunity is clear. Our first thesis is about how PICME converts it into revenue by bridging the gap between where monetization stands today and where regional benchmark demands it to be.
PICME's ARPU stands at 4,354 Sri Lankan rupees, just 1/4 of Grab, highlighting significant monetization headroom despite the market leadership. Deepening the cross-selling of transport, food, and lifestyle offerings, we expect the user spend to rise sharply. South Asian peers with integrated platforms have shown higher engagement, higher users, and higher revenues.
PICME's 70% market share attracts a majority of users, which brings more active drivers onto the platform. More drivers means shorter wait times, attracting even more passengers and increasing transaction volume. Higher transaction volume improves driver earnings, which keeps driver supply growing. Each turn of this flywheel widens the gap between PICME and every competitor trying to break in.
Demand and supply are expanding exceptionally at the same time, with 59.7% internet penetration, 30 billion Sri Lankan rupee digital government budget, acceleration digital adoption. This adoption itself helps PICME to penetrate beyond Western province. On the other hand, 2025 import relaxation triggered a 6-fold surge in three-wheeler registrations. This is a huge supply for PICME. This dual expansion of demand and supply is structural and long-term.
Revenue growth is only half of the story. Our second thesis focuses on how margin expand as the revenue grows, and the answer is structural, not cyclical.
PICME has already crossed the profitability inflection point, and the math here is compelling. With the majority of its cost base step fixed, every incremental rupee of revenue flows disproportionately to the bottom line. EBITDA margins have scaled from 16% to 38% in just 2 years, and we project 43% by FY30.
PICME's new verticals don't start from scratch. They operate on the existing infrastructure. Costs remain low as revenue increases, and high-margin sectors such as events and a 33% CAGR on the food vertical all operate on the same platform. A single platform cost base where revenue increases creates operational leverage and increases company profitability.
PICME's 1 billion rupee AI investment is not a future ambition. It is already deployed. AI dispatch cuts wait times by 11%. Dynamic pricing captures peak demand. Order pooling batches deliveries. Demand forecasting matches supply with real-time need. Each tool compresses costs and lifts revenue simultaneously.
Revenues are growing, margins are expanding. Can a competitor replicate this? Our third thesis answers that question. PICME have developed a strong competitive moat across multiple dimensions.
Foreign platforms like Uber currently benefit from the structural tax advantage in Sri Lanka, giving them a head start. But in April 2026, the Digital Services VAT eliminated this tax advantage by leveling the playing field. The platform best ready to capture this opportunity will gain, and we believe that platform is PICME.
PICME has a strong, PICME's trilingual interface removes the digital barrier. This enables the tuk-tuk sector confidently participate in digital economy. This strong connection builds a lasting trust and adoption, translating into multiple recognitions.
PICME operates with a financial resilience that competitors find hard to match. PICME's free cash flow has hit a critical inflection point, enabling counter-cyclical investments while others retreat to preserve cash. On the other hand, PICME's liquidity is unmatched, with a current ratio of 2.13 times and a cash ratio of 1.69 times. PICME covers all liabilities with cash alone. This is not just financial strength. It keeps making competitive advantages stronger over time.
Based on this strength, PICME delivers strong operating performance. In FY 2025, the ROE was 54% and the ROIC was 51.7%. This is 3 times the industry benchmark for top tech firms.
During the past year, PICME's share price has gone from a low of 39 rupees to a high of 170 rupees. That's 4.3 times return in just over a year. These values have outpaced ASPI and every prospectus target the company set for itself. The market is beginning to see this story, and our analysis shows that it's not finished doing so.
PICME have outperformed all the comparable shares. But the real question is, did we lose the opportunity? Our valuation says no. Our valuation is anchored on a fundamental driven DCF, providing a clear, rigorous analysis into company intrinsic value and enhancing into sensitive analysis, scenario analysis, and Monte Carlo simulation. To ensure our robustness, we also cross-check our result with relative valuation multiple of PE, confirming that PICME remains materially undervalued.
Our DCF valuation is built on a clear 4-part framework. Investment thesis drive key performance assumptions, which flow into financial projections, anchoring the DCF. Applying a WACC of 15.61% and a 3.5% terminal growth rate, we project PICME's debt-free balance sheet at regional scale to the cash flows that underpin our LCAT 192.55 target price. Each number traces back to a specific strategic driver.
PICME's ESG profile is not just a compliance exercise, it's a strategic advantage. High governance scores aligned with IFC practices increases transparency and credibility. On the other hand, they have a people-centric model that prioritizes driver welfare and employee development. This increases the stakeholder trust over time. However, PICME is currently experiencing a gender disparity within the staff.
Strong performance unlocks green financing, enabling PICME to invest in EVs and charging networks. A cleaner fleet attracts sustainability-minded users and eco-partners. During Cyclone Ditwa, PICME operated as a national utility when the traditional infrastructure failed. This shows that the company focuses on sustainable growth.
To provide a balanced perspective, we identified 4 primary risks that could impact our valuation. First, supply-side churn. Driver multi-homing could increase ETS and weaken PICME's leadership. Second, geographic concentration in the Western province. Third, fuel inflation that squeezes driver margins and impact the demand. Finally, PICME's dependence on asset-light cloud-based model.
PICME combats driver churn through loyalty tiers, instant settlements, and education-linked incentives such as Nana Pahana. The concentration risk is systematically mitigated through geographic expansion and revenue diversification. Scalable cloud platform and real-time data controls aligns the platform resilience.
Crisis-tested, debt-free, and culturally embedded. PICME isn't just resilient. A structural revenue gap closing fast, margins that expand with every rupee of growth, and a moat that regulation, culture, and financial strength reinforce from every angle. We reiterate our buy recommendation, 192.55 target price for a company the market is still underpricing. Thank you for your attention, and we welcome any question you may have.
Thank you very much for your wonderful presentation. If I'm to just start off with the questions, I think in one of your slides towards the latter side on the valuation, you had mentioned that your target price to earnings ratio was 39 times. At the moment, if you look at the current market, it's trading at about 10 to 11 times. Can you justify to me why you think that PICME should trade at maybe 3 to 4 times the multiple that the current market is trading at?
Just take our peers. We have in our relative valuation, we categorize our peers into 3 tiers based on the model that related to PICME and other sectors and revenues and others. So based on that, we did a peer comparisons and we weighted it. You can see that like for the Uber, we have weighted it in 60%, Uber and Bluebird, and Zomato, which is a delivery app, I mean the food delivery, which is not exactly related, but for that, and it's a startup and it has a huge profit hike, so we have weighted it 15%. And the third, others you can say it is weighted on 25%. We have tried to be so much skeptical and to be more realistic on our valuation to give our investors a good value. Based on that only we got that 39x on our relative valuations.
To just question you a little bit on that slide over there, I think it mentions that Uber is trading at 25 times. Can you explain why PICME should be trading at a higher multiple then?
It's not, Uber is not trading at 25%. In Uber's relative valuation, we have weighted it as a 25%. Because Uber is a global firm, global company which we can't directly compare with PICME. So we have taken nearly 7 or 8 peers and we have weighted each company based on their related to PICME. To take a skeptical and realistic relative valuations. Even though some companies you can see most of them are loss-making companies which show a negative PE, we exclude that to have more realistic.
Okay, thank you. And just another question from me. You also had mentioned that I think you're expecting your EBIT margin to stay stable at about 40% or 42% over the next couple of years. But as you know, PICME earns in rupees, but a lot of its OPEX or its tech stack is in dollar terms, right? And Sri Lanka has been vulnerable to FX risk in the past. How have you factored in, for example, if there's a 10% depreciation in the currency, what does this do to your valuation or your profit margins?
To clarify on your question, you're asking how EBITDA margins will be impacted if there is an issue in the future with macroeconomic terms. Is that?
Yeah, specifically in terms of the currency risk.
Okay, so PICME's model is centered primarily on Sri Lanka. So there won't be a huge impact, even if you take the foreign currency figure in the P&L, it's not a huge impact on the entire financials of PICME. Our focus, in the sense, I don't think foreign currency is going to be an impact on PICME. If we take the market PICME operates in, it's primarily Sri Lanka, and as such, we do not expect foreign currency would impact a lot, besides the Google payments, and that is not a huge value based on our valuation.
I have 2 questions. One is, you mentioned about some global peers. I think with the exception of, if you look at the region, with the exception of Grab, maybe GoTo, which is Gojek and all that are probably Bluebird unlisted. But if you look at Grab, Southeast Asia, large addressable market, lot of affordability in that population. They've gone in a similar monetization strategy. But if you look at the stock price, the story is very different. I mean, I think they listed through a SPAC maybe 3-4 years ago, and the stock is down maybe 70% or 80% somewhere there. What is PICME doing right that Grab is doing wrong?
PICME, you can see the financial first. PICME is very attractive to investors because it's always outperform all the projections. Even you can see this final 2026, it's always almost to reach almost beyond our projection. Its third quarter result was released and it was perfect. So like almost it reaches its goal. So that is one of the example. And we can see PICME has 1.4 million users. We always have a misunderstanding what is PICME. PICME is not a logistic or not a delivery app. It's a digital mobility. It's a platform which have 1.4 million users. So it can just divert in any revenue and it can have a potential. I think that's that the PICME is out. I mean, that's the difference that PICME is working on that, and they are on that revenue stream like you can see that food delivery, which has a margin, a big margin, and event and everything, and our thesis points like revenue, margin expansion, thesis point, the margin expanding. Then investors are very happy because it's reaching every milestone that Pygmy keep itself. You can, as my friend said in the presentation, it outperformed all his prospectus projection. It gave us the projection, it outperformed it. It's literally every investor like that and investors attracted to that. So that's why Pygmy is continuously expanding it. You can see it has from 39 to now 150, like 170, and it was like 154 recently. So that shows the investors more attracted and price is high. But in Grabs, you can see it's more different. We have a slide which we compare with the Grab because our revenue is compared with the Grab revenue. So we did many adjustments for that. So it shows Grab revenue is good. They have the potential, but the costing is very high because the marketing and other costs are very high, which doesn't, the EBITDA doesn't generate due to the revenue. That's why we have compared the Grab with the revenue, and we have done an adjustment for that also because it is multinational country. So we have adjusted our GDPs, that per capita income and everything. You can, next slide, you can show that workings. This is what. So from all this analysis, we find Pygmy is more attractive than other peers. That is why it is very difficult us to do peer comparison because it is very attractive and it is very different because they mainly focus on Sri Lanka and be a best company in Sri Lanka. Hope I answered my question.
My second question is on the regional expansion. I think we've all seen in the media, certain resistance coming in, outskirts, saying that Pygmy kind of, competes with, those local operators. And we've seen this in Malaysia. Grab had some issues. I think European cities, Uber had some issues. Are you concerned about it? How do you think, this is going to get resolved?
Yes. If your question is, did we take into our valuation? It's, of course, we have taken in. We have 3 cases. Our bear case has almost everything, which is we almost want to be a pessimistic and we are very bear case. Even we did a sensitive analysis on our EBITDA for capturing all that in our analysis. But if you ask me what is our point of view on that, you can see Pygmy's price and the normal meter rate is not that much different. But in the region, tourist area, they argue. But instantly, we see it as a negative promotion because they instantly say in the media that Pygmy charge excess rupees and we charge excess rupees. Obviously, customer knows the price is not much different. I mean, the standard price and Pygmy's price is not much different, but they are charging high. So we see as a negative promotion. And we don't see a sustainable, we don't see a sustainable problem there that Pygmy should address. Pygmy is addressing that. They are going aligned with their, I think we had a problem in they had a problem in Nooreli and they have reached the DAG and everything. They have done that. But in the long run, anyways, the customer prefer Pygmy. That is why even the drivers, there are drivers who drive Pygmy, they like to drive Pygmy, but the regional mafia don't allow it. So we don't see that as a big problem because obviously it cannot happen, it cannot legally happen. So we do take all the considered valuations, but that is our perspective on that problem.
To add more to what my colleague had to say, okay, so if we're talking about regional expansion itself, Pygmy is diversifying and specializing in those specific regions. So it's going to Kandy through food delivery instead of ride-hailing. It's approaching Jaffna through other persons. So it's specializing in that specific segment instead of going straight to ride-hailing to that. They're looking into the segment, what they specialize in, and then they're ramping it. So I don't think that will be a huge.
Right, I think that is all the time we have for questions. Thank you very much for a good presentation and for taking all the questions and answers.
Thank you so much.
Thank you very much.
Thank you for the presenters from SLIIT Campus, CA, Sri Lanka. Next, we move on to our 4th and final team, and that's from the University of Jayewardenepura, Team A. Give them a big round of applause, ladies and gentlemen. University of Jayewardenepura, Team A, comprised of Senisa Kramer, Kulani Kulatunga, Sashini Disanayaka and Shakya Navanjani.
A decade ago, one platform revolutionized how you moved around. Now, it's redefining your everyday life. Ladies and gentlemen, we are Team A from the University of Sri Jayewardenepura, unveiling the endless possibilities of that platform, PickMe. We issue a strong buy recommendation with a target price of ₹190.34 derived from a rigorous DCF valuation backed by a relative valuation. This implies an upside potential of 21.23% from the closing price as of 23rd of February for Digital Mobility Solutions Lanka PSC.
PickMe moves fast. They began as Sri Lanka's first mover ride-hailing platform. Today, backed by a landmark IPO, PickMe is positioned to become Sri Lanka's first listed super app, offering a range of services. The company is a tech-driven, two-sided platform that efficiently matches independent service providers with their consumer demand. Currently, hailing dominates the revenue contribution at 85%, delivery stands at 15%, and with experiences and logistics being new arrivals yet to reveal their full potential. And also, they are planning to expand into new adjacent layers with high growth potential like office transportation and financial services. PickMe is expanding nationwide with a volume contribution from outside the Western province now at 19% compared to 13% last year. Also, their presence in Nepal provides an early glimpse of international expansion.
Now, instead of looking at the industry, competition, and financials in isolation, we connect them all as a single investment story. As a result, we see three key reasons why this stock represents a strong buy. The market is growing. Why? People now want better value in transportation and in everyday commerce, and digital platforms deliver it better. PickMe captures this growth better than the other players. How? Their strategic decisions on how to compete widen their market share. Finally, that growth translates into shareholder returns. How? Operating leverage expands margins and increases ROE. Our first catalyst, the market is growing. As quality of life improves, people seek better value in transportation. Traditional modes often fail due to low access, creating the first mile, last mile gap, unfair pricing, and unreliability. On the other hand, owning a vehicle is expensive and stressful. Hence, the demand for digital mobility is increasing in Sri Lanka with fast tech adoption facilitated by rising internet usage and smartphone usage, and of course, improving affordability.
Supply also rises as digital mobility increases value for drivers. This is further reinforced by the rise in the gig economy and growing vehicle base. Remember, growth doesn't stop at mobility. Demand naturally spills into everyday commerce, and supply also grows as more businesses move online.
That's exactly why the markets for digital mobility and super apps are growing.
Now we saw that the pie gets bigger, but who grabs the biggest slice?
Yes, Sashi. This brings us to our second catalyst. We believe that PickMe is better positioned than the competition to capture this industry growth. Our first advantage, PickMe is always an early bird. They keep on expanding across Sri Lanka well ahead of competitors. That visibility turns into preference, fueling strong word of mouth. So, when a new rider or a driver enters into digital mobility, PickMe tends to be the first app they try because it's the most available and the most recommended. And for the first choice, growth is automatic. Our second advantage, efficiency-led competing over discount wars. So in our interviews, it was revealed that neither riders nor drivers stick with an inefficient app even if it's temporarily more profitable. Thus, efficiency matters. PickMe's sustainable take rate has enabled them to invest in such deep technologies like AI, resulting in such efficiencies. Newcomers with low take rates eventually fade out like many did in the past because they can't keep sustaining the efficiency from technologies without a sustainable take rate. Remember, discounts fade, efficiency retains.
Moving to our third advantage, from usage to dependence. PickMe isn't just for getting a cab anymore. It's a multi-vertical ecosystem which also drives cross-usage. Try booking an event ticket, you will immediately get a ride discount. Over time, this occasional usage converts into everyday reliance, increasing value for drivers, merchants, and users.
With these advantages, we believe that Pygmy's 65% market share today will expand up to 75% in the next few years, capturing the growth better. And of course, the competitors will be left chasing the game, not shaping it.
Cool story, but what's in it for the shareholders?
Our final catalyst answers that question. Top-line growth amplified by operating leverage expands margins and lifts shareholder returns. Let's talk numbers now. As Pygmy captures more from industry growth, their users and total movements increase, lifting gross transaction value at a 6-year CAGR of 22.19% over our forecast period. Pygmy's revenue is simply a product of GTV and take rate. With its well-balanced commission structure, this volume-driven GTV growth flows through to net revenue growth at a 6-year CAGR of 25.29%.
Pygmy's 60% of costs are more or less fixed. So as activity increases, economies of scale reduce the cost per movement. Hence, revenue grows faster than cost. That operating leverage directly moves into margins. EBITDA margins increases from 37.7% to 53.8%, and NP margins goes from 19.7% to 32.6% over our forecasting period. These margins then drives shareholder return. ROE expands by 26.7 percentage points, driven by operating performance, not by financial leverage, highlighting the sustainability of earnings. EPS grows at a 6-year CAGR of 36.5% with a strong DPS growth, with a payout around 65%, and turning profit into cash. FCFF grows at a 6-year CAGR of 50.83%, and with ROIC staying above 65%, value creation stays durable. This final catalyst completes our investment story, showing the growth isn't just on slide, it shows up in your pockets as both dividends and an upside.
We now move to our valuation. Our buy recommendation is based on 100% DCF valuation, giving us a 12-month target price of 190 rupees and 34 cents, reflecting an upside of 21.23%. We used a WACC of 16% at a target debt-to-equity ratio of 10%. The cost of equity of 17% was computed using the capital asset pricing model. A risk-free rate of 9.8% was incorporated based on the 5-year Sri Lankan bond rate. We also applied a 3% terminal growth for valuation. A 100% DCF is also backed by a relative valuation, primarily focusing on next 12-month total enterprise value to forward EBITDA multiple. Here, we derived an implied share price of 196 rupees and 68 cents, reflecting an upside of 25.28%. We also conducted a scenario analysis by weighing our total movements and the overall take rate based on driver supply, demand, competition, and utilization. In our bull case, we saw an upside of 35.25%, whereas in our bear case, we saw an upside of 8.7%. We also conducted a sensitivity analysis to the changes in WACC and terminal growth. Even under the most conservative assumptions, our valuation continued to show an upside of 2.45%. Finally, we ran a Monte Carlo simulation where the outcomes clustered around our base case, giving us a probability of upside of 68%, further reinforcing the robustness of our valuation.
ESG isn't a decoration at Pygmy. It is embedded in the system. We start with social, the powerhouse of Pygmy's ESG. Pygmy creates income opportunities across Sri Lanka with a recorded number of female drivers. They improve their drivers' well-being through insurance coverage, 24-hour support, and Nanapahana program. Social is the upside, governance is the safeguard. Pygmy implements strong controls to protect their users. They're led by the best with a diversified board across age, gender, and the industrial experience. 53% public shareholder base represent the strong market confidence. Trust matters, but so the emissions. Pygmy reduces their emissions through AI dispatch and route optimization, while ride and pooling produce lower carbon dioxide. With EV integration, they reduce operational wastage and energy per transaction. To put ESG into numbers, we ran ESG valuation. In the upside case, we considered ESG opportunities like efficiency and pooling gains pushes our upside into 23%. On the downside scenario, we stress the biggest ESG risk, a data breach, and it still implies a 17% upside. Across all categories, ESG scores 3.5. Of course, as a newcomer, there are gaps, but that's the upside, a solid base with plenty of room to level up.
Dear investors, market grows, Pygmy leads, and shareholders win. Invest today and let Pygmy deliver returns to your doorstep. Thank you, and we now welcome your questions.
I have a question. First of all, well done on the presentation. I have a question on your forward-looking margin predictions. I think you were predicting EBIT margins at about 53%, if I'm not mistaken.
Yes, can you please? Yes, I would like to take that question.
My question is, have you compared these target margins in your final year of forecast with what has been achieved by players outside Sri Lanka, those who are in the listed space, and how close or equal or higher, how do they compare with these margins?
So as you might already know, the global players just break even. They Uber and Grab just break even into the 2023. But it's not the same as Pygmy. Pygmy utilize the under-penetration in the country very well. They are very localized. So global players, their target was to expand, to grow at any cost. But Pygmy is not like that. Pygmy didn't do the mistakes that they made. Like they didn't burn cash, and they invested in technologies that would increase the efficiencies. So Pygmy is sustaining profits. That is why our margin grows this much. And also, this is further reinforced by the fact that Pygmy keeps on expanding into high vertical margins such as courier and of course experiences. And their operating leverage further reinforce these margins, and of course their cross-selling strategies further support the margins. That is why our margin grows.
And one more question on the risks you have identified. I think data breach as a potential risk and given a kind of a revised lower valuation. Can you walk me through the thought process
yes.
in terms of how you incorporated and evaluated the risk of a data breach and its impact on the valuation?
Tashi, will you take that question?
So we identified the biggest ESG risk and the biggest ESG opportunity that this company would face. So we assumed in 2029 that a cyber attack risk or a data breach would happen. As a result, we assumed that the total movements of this company would go down by 20% and also as a post impact, even in 2030-31, the movements would gradually decline. At the same time, we integrated selling and marketing expenses, because after the data breach, in order to capture that reduced movements, they will have to incur more selling and marketing expenses. So we also incorporated that expense to our expenditure on 2029 and 30. Apart from that, we also increased the capex, because in order to make sure that Pygmy will not face with such a circumstance in future, we increased the capex expenditure even into 2029, and that's how we got this ESG risk incorporated to our valuation.
Just one question for you can ask. So you had mentioned that your dividend payout ratio over the next couple of years would be about 65%. Given the growth rates you're projecting, one could say that Pygmy is still kind of an early stage company or a growth company, right? Do you think that it is justified for them to pay out such a return to their shareholders rather than reinvesting it in terms of growth, further growth into the business?
Thank you for the question. I'll take that. Yes, we believe that they will pay out at least 65% from their cash, given the fact that they are a very cash-rich company, and they have already invested in so many technologies that make their platform efficient. So yes, they are able to pay 65% payout ratio, and they can sustain it. We believe that.
Sorry, just to follow up on that if I can. I didn't see too much in terms of your CapEx assumptions. Do you have some of that in your appendix by any chance?
Yes, CapEx is there. But we have kept the CapEx, we have included step CapExes in our valuation, because Pygmy has already invested in so much, and they are gaining the efficiencies out of those investments. Of course, they would have to increase their CapEx, let's say in 2 years, 3 years time. But we believe that they are able, even though they sustain the capex, they would be still able to pay out dividends at a 65% payout ratio.
Did you look at the share price movement of this company over the last couple of years? Do you have?
Can we go to the slide? Yes.
Okay. So you see clear jumps and you have named it as a foreign investment there, right? So what do you anticipate will provide that next leap of growth for this company?
Next leap of growth?
In share price.
In share price.
Yeah.
It would mainly come from the intrinsic value of the company, since the market is not yet capturing the optionality, ecosystem optionality of the company. The market is undervaluing this stock. So we believe once the market realizes how valuable this company is, the share price would further gain. And of course, in these leaps, we can see that they have a good, their share price have a good sensitivity to news releases. So we can further reinforce the fact that this share price will go up.
I think you have mentioned their first listed super app. In your view, to be a super app, and based on your assumptions, what percentage of non-ride-hailing revenue or profitability comes from the other, if I would say, flywheel effects in your maybe last year of forecast? What's that percentage of profitability, percentage of revenue maybe?
So currently, I would take that question. Currently, ride-hailing outperforms the other sectors with having an 85% contribution to the total revenue. But given the fact that although the volume contribution is low from delivery segment, we believe that the growth, the growth integrated within the delivery segment would increase, so that in year 31, in 2031, the contribution to the total revenue from delivery segment would be 18%. And also we should not forget the fact that this company is investing in high margin verticals, especially when it comes to Korea and experiences. These companies are experiencing a lot of operating leverage. So we believe that by 2031, the contribution of experiences and other platforms would be around 3%, whereas ride hailing would be around 79%.
Take rate is going up when volume is increasing. What's driving that? I mean, grabbing more share of the gross transaction volumes? What's driving that?
So your question is why take rate is going up? It is going up. We have to understand the fact that the take rates of Pygmy is way less than the global peers. So if you take Uber and Grab, so their take rates are in a very high level. So we believe there's still gap for them to reach that point. And of course, it is not the proper way to compete by reducing their take rates, because they compete through efficiency, not by cutting take rates. And the company has declared that they would increase their take rates up to from 10% to 12% in the next couple of years. That's why we have incorporated this take rate to our model.
Your experiences business is growing only from 0 currently to 3%. Why is that, and don't you expect to see now? You spoke of this being a super app. That doesn't quite tally, does it?
Of course, it's a high margin vertical, but still, ride hailing is still underpenetrated. So we believe even at this year, still ride hailing would be still penetrating. That's why even though experiences are growing, experience verticals and other verticals are growing, we believe that ride hailing would still outperform.
I think that takes up all the time that you had for questions. I really like the way that you presented your story as a story, which was very easy to understand. That was a very good presentation. Congratulations again on a great presentation and Q&A.
Thank you so much.
Thank you, ma'am.
Congratulations and well done to the University of Sri Jayewardenepura Team A, our fourth and final team. And now it's time for our eminent panel of judges to decide who will be crowned and win the CFA Institute Research Challenge Sri Lanka for 2025-26. Judges, we now invite you to step outside to calibrate and deliberate if the decision is very difficult as well, which I'm sure it is the case. Whilst the judges exit the hall, let me take some time to thank our sponsors, without whose support this event will not be possible Starting off with our platinum sponsor, the Colombo Stock Exchange, our gold partners, Deloitte and First Capital, silver partners, HNB Investment Bank, Capital Alliance Group, CT Smith, NDB Capital Holdings, Senfin Asset Management, UserPace Sri Lanka. Our knowledge partner, Acuity Analytics, our banking and venue partner, HNB PLC, print media partners, the Daily FT, Daily Mirror and Sunday Times, soft skills partner, Advi, text messaging partner, Textware, candidate resource partner, Alpha Business School, and supporting partner, EduLoan. Now, talking about our subject company, we've heard of this name so many times, and it's so familiar. Known for popularizing ride-hailing in Sri Lanka, PickMe, or Digital Mobility Solutions Lanka PLC, is a leading technology-driven mobility services provider in Sri Lanka. Recognized for transforming the country's transportation landscape since its inception, the company was established to design and operate innovative digital platforms that enhance the efficiency, accessibility, and safety of urban mobility. Today, Digital Mobility Solutions Lanka PLC develops, manages, and scales state-of-the-art ride-hailing and transport technology solutions, ensuring seamless connectivity for millions of commuters in Sri Lanka while driving the nation's shift towards smarter, data-enabled mobility ecosystems. With that, we have a short video by our subject company, which will tell you more.
When you're in the business of creating better futures for everyone, you realize that there's often more than one finish line. And while speed is important, what really pushes everything forward is continuous transformation. It's what leads to better futures, to real substantial change. It connects the people, IP, and industries that create entirely new hybrid businesses. It turns an insurance industry that covers people into a wellness industry that helps them recover. It opens faster routes for first responders, teaches bacteria to eat microplastics from the ocean, deploys trusted AI to preserve and protect our forest and wildlife, and even fights wildfires from space. We are committed to perpetual impact because it's what pushes the world forward.
We now have a short video by PickMe, our subject company.
Hi, I am Jeffrey Zulfa, founder and CEO of Digital Mobility Solutions Lanka PLC, better known as PickMe. It is a privilege for PICME to be part of CFA Institute Research Challenge Sri Lanka for 2025-2026. Our journey has been filled with innovation, governance, and entrepreneurship. We are glad to support the next generation of financial professionals in our country. Through this challenge, I believe the students have gained enormous experience in understanding a digital native business like us. Today, the most valuable tech companies are also driven in the same model. I hope the learnings that you gain from this exercise will help you in your future endeavors. The CFA Society in Sri Lanka has done an outstanding job in this program. I believe this will help bridge the gap between academia and the corporate world. Finally, for the 4 finalists team, I know you worked so hard to come to this stage. I wish you the very best.
And that was our subject company, fondly known as PICME. Ladies and gentlemen, we have our chief guest for the evening with us, and to give you a glimpse of his track record. Senior Professor Harindra Disabandara is a distinguished tri-sector leader with a 30-year track record, spanning across apex national regulatory bodies, higher education administration, and corporate board governance. He holds the distinction of being Sri Lanka's first PhD in finance and corporate governance and its first senior professor in the discipline. His career integrates scholarship, institutional leadership, and regulatory engagement. He has contributed to the development of capital market frameworks, corporate governance standards, and financial educational initiatives, whilst also playing an active role in university strategic planning, quality assurance, and academic administration. In addition to his research and teaching contributions, he has provided leadership during periods of institutional complexity, including university-level governance challenges, and recognized for successfully navigating institutions through periods of extreme volatility, from averting a considerable capital market disruption, operational disruptions during the global pandemic, with a consistent emphasis on stability, transparency, and long-term institutional development. He is an invited speaker at many academic and professional forums and is recognized for his analytical approach to governance, market integrity, and higher education policy. Ladies and gentlemen, a big round of applause, and we very respectfully invite Senior Professor Harindra Disabandara, Chairman, Securities and Exchange Commission of Sri Lanka, to address you all.
Good afternoon, ladies and gentlemen. Guest of honor, Mr. Jahan Jawan, Country Head, Equity Analytics. President, CFA Society, Ms. Rashmi Paranavithana, and Mr. Arun Alvis, CEO, CFA. Ms. Nilupa Perera, Chief Regulatory Officer, Colombo Stock Exchange. Chairman, Mr. Travis, CFA, Chairman, CFA Institute, this particular challenge. And HNB Senior Vice President and the team, board members and the CEO of CFA Sri Lanka. Mr. Jeffrey Zulfa, CEO, PICME, I must say. Academics from representing participating universities, university students participating for the final round. I must say, future capital market experts for me. And that's our feeder to the entire capital markets. And distinguished invitees, industry professionals, ladies and gentlemen. It's a great privilege to address you at this point. as the capital market regulator here. But normally I do not like to say we are not only capital market regulator, we are enablers of the capital market to develop further and further. So I would like to warmly express my thanks and in a way my wishes to CFA Society Sri Lanka for successfully organizing this 19th edition of CFA Institute Challenge Sri Lanka 2025-2026. The local chapter of this prestigious global competition. So my heart is very close to this competition because I have been directly dealing with my students when I was the head of department somewhere in 2015 to 18. So I know the importance of this particular very important event organized by CFA Sri Lanka for a long period without reducing the quality. Every year I see rising level of quality. So congratulations and hope you will continue the same pace in an enhanced way in time to come. And in the same way, I would like to commend the remarkable milestone of 38, if I'm not mistaken, right? University teams applying this year. I think this highest ever, right, to date, reflecting the growing relevance, credibility, and impact of this competition within Sri Lanka's academic and financial community. I think always there's a criticism against universities. There's no connection with the industry. I think CFA Sri Lanka became the linking function and to connect strongly the academia with the finance industry. Thank you very much for that again. So, and I would like to recognize the significant value of the research challenge in bringing academic learning with practical industry exposure, thereby strengthening the talent pipeline of the capital market. That's why I said this is the feeder for the capital market. The strong feeder, and we need more and more talented, I must say, analysts in Sri Lanka. I think in the coming year, according to our forecast, only SCC needs about 25, right? Then CSC and other institute, it can be reaching 500, right? So I would like to acknowledge at the same time with appreciation, the commitment and the hard work of the participating students. I know, 3 years I have been dealing with them, so I know how hard it is. So, so a lot of dedication is required, a lot of preparation is required. So it's, I think, I must say this in public. If I compare my time with these students, my performance is far below compared to them. So we didn't have this kind of opportunity in the past, right? But I think whoever wins, all are winners. All are winners. I very, very carefully listen to almost all the 4 presentations. I think I can't see any major error, but basically very good analysis and very good presentation. I think Sri Lanka's capital market future is clear. So thank you for doing that and thank you for joining with the CFA challenge this time also. And when you look at the role of the next generation of investment professionals, I think today's participants are the tomorrow's analysts, as I told you, basically the fund managers, regulators, and policymakers. So let me repeat it again. At SCC, we need about 147. We are running the SCC with just 70 plus. So most of the time, what we need is many regulators. There's a vacancy. There are a number of vacancies for regulatory people, policy level people, and analysts. So I think in the capital market, there may be many opportunities for these kind of students, because in line with the SCC's 12 key projects which we learned very recently, that now the entire capital market is working together. So with that, I think a lot of developments are required. So we will be having, I don't know the exact date, but we will be having multi-asset derivative exchange, maybe inland or inside the port city. And at the same time, we will have digital assets in time to come. So with all those new initiatives, definitely we need more and more analysts, fund managers, and so on. So I would like to request you all, when you fine-tune your skill set, skill inventory, kindly look into digital asset aspect as well, because we don't have digital asset at the moment. But we are willing to lay down the foundation for you. So it is up to the listed companies to bring those products into the Sri Lankan market. And when we look at the integrity and professionalism aspect in the market, I think this is also a great thing. I think when the students work with the industry experts, I think CFA Sri Lanka is, they have a separate chapter even, right, module on ethics. So I think these CFA holders, CFA chart holders, always emphasize on not only the work, but also the ethics. It is very important in our market. So ethics drive a long way. So I think the integrity and ethics are very important. At the same time, in the next generation, people might consider more into the professionalism and standards. And that is very well linked with the SCC's fourth objective, to have a market with latest and the comparable global standards. So for that, we need such professionals. I think in that angle also, CFA has done a big job, because you are helping and linking them to the professional world and emphasizing this quality, relevance, and integrity of professionals. So when we look at the significance of research and evidence-based decision making, this is again very, very seriously relevant and applicable to Sri Lankan capital market, because whatever the decision we make, whatever the recommendation we made, so it must be backed by data. So if you look at Sri Lankan broking arms, broking houses, we have 28. Out of that, I think almost all the broking houses are having their research arm. Some are working, some are doing an excellent job. And some are, basically, I must say, for me, average. So I think we have to bring this up. That can be done enhancing the research arms, especially at broker levels. And when I try to understand the number of research publications means the research outcomes from firms, the readily available are less than 10, I think. So that means readily available research reports are not seen in our market. So I would like to take this as a serious thing, I must say. So in time to come, we are going to make some kind of compulsory requirement for them to bring up with they have to have a specific research arm, and they must come up with specific research report to the market. It should be readily available for everyone, including SEC. I think CSE also can consider this matter. So robust equity research is essential for market efficiency and informed investment decisions, because if you are not backed by data, if you are not informed, your decision is based on luck or sometimes based on maybe herding. So therefore, this is very important, and the markets must be driven by data, discipline analysis, and long-term fundamentals, not speculation. I just asked Rashmi, the President CFA, whether you allow any other analysis other than fundamental analysis. She declined, so she said no, but only thing is you can have supporting data and you can attach whatever you want. So I think it's a good move. So at the same time, So I would like to emphasize that if Sri Lanka can, CFA can consider other tools as well, but for the presentation, I think we can stick to this. So high quality independent research strengthen investor trust and market credibility. So in the Sri Lankan market during the last 2 to 3 years, I think we have established not only SEC, altogether, we have established trust and confidence in the market to a certain level compared to many, 2009, 10, 11. So to bring this forward, I think quality input, quality analysis, and the professional way of looking at the data is very, very essential. And the CFA framework continues to champion the highest standards of integrity and professional responsibility worldwide, and this is not a secret for everyone. So I think the university students here can talk about the importance of CFA and the CFA qualification. I think it's a great, it will be a great qualification in Sri Lanka. And even for our capital market recruits, especially at SEC and CSC level, now we are going to consider a reputable qualification, because we, in our places also, we have very few CFA holders. So we need more in our day-to-day works. So when you look at the global exposure and opportunities, so while doing and while participating in this kind of programs, the CFA Research Challenge offers Sri Lankan students, especially university students, a valuable exposure to expected global platform and placing them alongside with peers from leading universities worldwide. I know Thailand, Singapore, Malaysia, they are far ahead compared to Sri Lankan universities, especially in the finance faculties. Yeah, I'm not going to, say that we are very bad, but we have some room to improve. So we need to think about all this, sorry, so that I'm also a professor in finance from a university. So then I also must take that challenge. But we need more capabilities, especially analytical capabilities. Then participation encourages in alignment with international standards and the adoption of global best practices in financial analysis and the investment decision making. In an increasingly interconnected financial landscape today, globally recognized qualifications such as CFA program provide a strong competitive advantage and open doors to regional and international career opportunities. So I think we can't hide this. This is a truth, and I think we must see the value of CFA. I'm not promoting only CFA, but CFA, we know the value. And I would like to encourage aspiring finance professionals to consider pursuing global recognized credentials, not merely for their career advancement and opportunities, but to deepen technical expertise, strengthen ethical groundings. I would like to emphasize it once more, grounding and contribute meaningfully to the development of Sri Lanka's capital market. Because Sri Lankan capital market atmosphere and the surrounding and the required development infrastructure is now in place. So what we have to do is with the introduction of 12 key projects in 3 years' time, I am confident that Sri Lanka will be reaching a different level. So we have lot to do, but for the moment, I think if we can deal with the 12 key projects we introduce together with all the stakeholders in the capital market, so we can go a long way. So there, number one thing is education, awareness, and the qualification you need. That means qualification is not just the paper qualification. you have to have the proficiency with required skill inventory. I think these students got a very good opportunity, and I think it's a learning environment created by CFA, not among the 5 students here from each group, so altogether 20. So it's more than that because 38, and even for them to support inside the universities, there are working groups. That means learning environment for at least 100 to 200 students is a great thing. But we'll see how we can expand this number. So then this exposure is not only to directly competing students. So then that will be transferred to many other students. That will be a chance for them. So with that note, so let me congratulate whoever wins. I think all are winners, as I told you at the very outset. So we'll see the outcome. Thank you very much.
Rashmi Piris Paranavitharana, CFA President, CFA Society Sri Lanka, to present a token of appreciation alongside Nadika Ranasinghe, CFA Vice President, CFA Sri Lanka. We are also honored to recognize Acuity Analytics as the knowledge partner of the CFA Research Challenge Sri Lanka for 2026. Their long-standing collaboration with CFA Society Sri Lanka has been invaluable, to say the least, offering a level of training that is truly unique to the Sri Lankan edition of the competition. Each year, Acuity Analytics delivers an intensive 5-day equity analysis training program conducted by a dedicated team of expert trainers. Their commitment ensures that every participating team receives world-class practitioner-level exposure to valuation, research modeling, and industry analysis, significantly elevating the standard of the competition and shaping the next generation of investment professionals. So a big thank you to Acuity Analytics. We also have with us the contribution by HNB. We extend our sincere appreciation to Hatton National Bank for their invaluable support as a sponsor of this year's Research Challenge. Through their partnership with CFA Society Sri Lanka, HNB has introduced dedicated education loan and credit card facilities, helping aspiring CFA candidates, both undergraduates and working professionals, access flexible finance assistance. Their commitment to reducing financial barriers plays a pivotal role in empowering the next generation of finance professionals like we see here today. So a big thank you to HNB. With that, we also request all of you to scan the QR code on screen to view more of the benefits presented by HNB. Ladies and gentlemen, looks like the judges have made their call. They are smiling away, grinning with the thoughts that they have about each of the presenters and the winning and runner-up teams. I'd like to firstly invite all of you to give them a big round of applause. Hard work going in. They have to pay attention across the 4 presentations. And I invite the judges to now please come on to the stage to give their comments and feedback on the presentations. I invite Dr. Buddhika Fernando, CFA Assistant Director, Acuity Analytics, Nilendra Veerasinghe, CFA Chief Strategy and Financial Officer, Senate Business Solutions PLC, and Trisha Piris, CFA, Head of Research, Capital Alliance. Ladies and gentlemen, another round of applause. Our 3 eminent judges for the evening.
Hello everyone. Let me start off by saying congratulations to all the teams that participated. You know that we run the grading process as an entirely anonymous process, so that none of the graders are aware of which university has written the reports. And then, now this year, we anticipated that we could eliminate some of the reports in the first round because they were not of very good quality necessarily. However, when we actually skimmed through the reports, we found that the vast majority, 90-95% of the reports, were actually of such a high standard that we fully scored all of those reports and gave everyone an equally good chance of becoming one of the finalists. So congratulations to all the teams who participated, and then to the great presentations that were presented today. I think for me, what marked the winner from the others was the ability to respond to questions and answers that they gave that made the vital difference between the different teams. So congratulations again, and I'm going to invite, since I do this every year for the last couple of years, I'm going to invite my co-judges to make their comments now.
So just a few remarks and kind of overall feedback that we'd like to share. As Bhutika shared, I think the key thing that really set apart the different teams was the ability to answer questions, the preparedness that we saw, both in terms of qualitative, being able to answer a question qualitatively, but also being able to back that up with numbers and carrying out sensitivities and scenarios that they were able to bring up on the spot, I think was a key differentiator that we saw, particularly that set apart the winning team from the others. I think what we would have also just liked to have seen a little bit more was probably more participation across the team. I think across all the teams, we would have liked to see a little bit more participation in terms of not just presentation, but also in terms of answering questions, as this is a team challenge. We would want to understand that everyone understands the valuation and the thesis behind what is being presented. But of course, I think the key thing we want to highlight is everyone did, I think, excellent presentations, and the clarity in terms of the story was quite clear across the different teams that participated today. But what really set apart was the ones that were able to bring out both the qualitative factors in their presentation and really hone in on the numbers and the scenarios around it to capture the real value in terms of what PICME is offering.
Once again, let me start off by congratulating all the teams for the wonderful presentations. I'm returning as a judge after about 5 years, and I see the quality of the presentations have drastically improved. So I'll give that to the teams. I mean, really well done on that. If I were to boil down everything to kind of one phrase, I think it comes down to clarity of thought. And clarity of thought has a great story to start with, and then the rationale, the numbers to kind of back it up. And like Dr. Bhutika and Trisha said, I think it was the Q&A that kind of opened up, peeled the layers and opened up the participants and revealed that clarity of thought in the overall thesis. So once again, congratulations for everyone who participated. I think today all of you are presenting your research reports. Tomorrow, most of you will be capital allocators, working for market participants in this country. So really proud to see that the quality of that talent coming up. Congratulations, and wish you all the very best. Thank you.
Thank you very much to our judges. I'd also like to invite Nadika Ranasinghe, CFA Vice President, CFA Society Sri Lanka, alongside Travis Gomez, CFA Director and Research Challenge Committee Chair, CFA Society Sri Lanka, and Saritha Vijayasekara, CFA Research Challenge Committee, to present the tokens of appreciation to our 3 judges for their invaluable service and for their time spent on judging and giving comments today as well. Ladies and gentlemen, the award for the Best Written Report of the CFA Research Challenge goes to University of Kelaniya. To our judges, and congratulations to the University of Kelaniya. I would now like to invite the following representatives from the CFA Society to present letters offering internships to our finalists. Travis Gomez, CFA and Chair of the Research Challenge Committee, alongside his committee members Hamdan Othman, CFA, and Sarita Vijaysekara, CFA. To collect the internship letters, I'd like to invite the leaders of the 4 universities to accept the letters on behalf of their teams. Starting off with our internship partners before we get to the teams themselves: Equity Analytics, Capital Alliance, Colombo Stock Exchange, Deloitte, First Capital Holdings, Hemas Holdings, and Userbase. And we now invite the team leaders to come forward, representing SLIIT Campus CA Sri Lanka, firstly, the University of Colombo, University of Kelaniya, and the University of Sri Jayewardenepura. Thank you very much to our presenters, and thank you most importantly to our internship partners for their contributions and enabling the future of investing professionals. Next, I'd like to invite onto the podium a very special person who has been working alongside his group tirelessly to make the Research Challenge a success. Not just on stage, but off stage in terms of trainings, making sure it's getting funded, effectively ensuring the agenda goes in order, and ensuring we get the right partners on board. So to do the honors with the vote of thanks, I'd like to invite Travis Gomez, CFA Chairperson of the Research Challenge Committee for the CFA Society Sri Lanka for the year 2025-26. A big round of applause, ladies and gentlemen, the chairperson behind this year's Research Challenge.
Thanks, Russell, and good afternoon, everyone. So I'll try to keep this short as I'm standing between you and the most anticipated moment of the day, which is finding out who the year's champions are. So I'll try to keep it short. But before we get into that, I would really be failing in my duty if I didn't take a moment to thank those who made this possible. On behalf of the CFA Society Sri Lanka, I would like to thank everyone who has supported us and played a part in this journey. What you are witnessing today at today's grand finale is really the culmination of months and preparation, beginning with the kickoff event that we started off in September 2025. And therefore, I would therefore like to take a moment to especially thank and recognize all the individuals and groups who have supported us throughout this journey. So starting with today's grand finale, first and foremost, a sincere thank you to our chief guest, Senior Professor Harindra Disabandara, for accepting our invite and for gracing us with your presence. Your attendance underscores the importance of this competition in nurturing the next generation of finance professions, and we are grateful for your insights and words of encouragement for the teams. I would also like to thank our guest of honor, Sri Jayewardenepura, for being here today. The comprehensive training program by Equity Analyst, who is our knowledge partner, has played a pivotal role in equipping our participants with essential skills critical for this competition. A special thank you to Rehab and the training team for your dedication and support. A shout out to our soft skills partner at HNB Academy for coming on board this year, as well as equipping our finalists with the skills necessary to win on this stage. We also extend our sincere appreciation to all our invitees from the universities, sponsors, internship partners, mentors, and graders. Thank you for your presence here today. and to support all the teams. Also, a special thank you to HNB, our banking partner, for hosting us at this venue, and for the support extended to the teams who are pursuing the CFA program. Taking a step back, I think really we need to really highlight the contribution from the teams, because they are really at the heart of this competition. And your dedication and hard work is really commendable. Well done, especially to our 4 finalists for persevering until the end and giving it your all. Your preparation, commitment, and confidence truly shone through during today's presentation and Q&A. We also extend our appreciation to all the university mentors and university representatives who have been supporting the teams since the onset. We appreciate your guidance in helping to shape and nurture these talented individuals. And our thanks also goes to the university outreach team for their support in this. I would also especially like to take this moment to thank all of our volunteers, that is the CFA charter holders, who have dedicated their time and effort. Because if you take for a competition of this scale, we've had close to 40 charter holders contributing in different capacities. This includes serving as our industry mentors, whose names should be displayed on the screen. Your dedication is truly commendable. And I've no doubt the mentoring and guidance you provided was an invaluable learning experience for the teams throughout the journey. We also want to recognize our panel of graders, led by Buddhika. Again, all charter holders. I think their names will also be displayed. The attention to detail and diligence in evaluating the research reports exhibited by the panel of graders have been invaluable. The team also highly appreciates you taking the time to share your insights and feedback with all the teams. And also to today's distinguished judging panel, Buddhika, Trisha, and Nilendra, thank you for accepting our invitation and sharing your expertise. I'm sure the teams find your thoughtful and challenging questions both insightful and valuable as they prepare for the next stage of the competition. Our sincere thanks to our subject company, Digital Mobility Solutions Lanka. Thank you, Tasnim and Madhuranga, for attending today's event, and the whole team at Digital Mobility Solutions Lanka for supporting us through the multiple Q&A sessions, the company visit, which made for a very invaluable learning experience. Of course, none of this would have been possible without the generous support of our sponsors and partners who are displayed on screen. Thank you once again to our platinum partner, the Colombo Stock Exchange, for supporting this competition in numerous ways. We especially would like to thank Rajiva Bandanayaka, CEO of the Colombo Stock Exchange, Nilupa Pereira, Chief Regulatory Officer, and the entire CSC team for your continued assistance and support. We would also like to acknowledge the support of the Research Challenge team at CFA Institute, as well as the President and Board of Directors of the CFA Society Sri Lanka for your guidance and encouragement throughout this journey. To the team from Kairos, led by Janice, thank you for being our event partner throughout the competition and your dedication and professionalism in ensuring today's event ran smoothly. Last but certainly not least, I want to extend my deepest gratitude to the staff of the CFA Society Sri Lanka. So this is Aruna, Sandanika, Vanita, Minura, and to my team in the Research Challenge Committee. This is Hamdans and Sarita for your commitment as well. Special thank you also to Anisha and Vijit for your invaluable guidance and support throughout. So with that out of the way, let's now move to the moment that we've all been waiting for and find out who our champions are. Thank you for your attention.
Thank you very much, Travis. And that, ladies and gentlemen, the chair behind the CFA Research Challenge for the local leg in Sri Lanka. I hope the teams are ready to hear what I'm about to say next. We have the runners-up, right? The runners-up will be walking away with a cash prize worth 125,000, the trophy, of course, and the members from the team who also intend to register for the CFA program within the calendar year of 2026 will be eligible for free membership of the Candidate Council of CFA Society Sri Lanka, along with a 20% discount of on the CFA program level 1 tuition fees at prevalent rates from Alpha Business School to all members of the runners-up team. To To do the honors of presenting the award, I'd like to invite to the stage Nilupa Pereira, Chief Regulatory Officer of the Colombo Stock Exchange, Aruna Alvis, CEO, CFA Society, Sri Lanka, Travis Gomez, CFA Director and Research Challenge Committee Chair, CFA Society, Sri Lanka, alongside Tasnim Saleh, CFA and Chief Corporate Officer of Digital Mobility Solutions, Lanka PLC. Ladies and gentlemen, the runner-up team for the CFA Institute Research Challenge Sri Lanka 2025-26. The University of Colombo. No easy feat, ladies and gentlemen, being the runners-up of the Research Challenge, the prestigious CFA Research Challenge here in Sri Lanka. Whilst the team remains on stage, we'd also like to acknowledge and thank and invite the faculty member whose support has been invaluable, Senani Theruvara from the University of Colombo. Can we have you in front as well? We'd also like to acknowledge the contributions of the assigned industry mentor for the University of Colombo, Tharindra Gunaratna, CFA of Dialogue Asiata. Can we have you on stage as well to collect a token of appreciation? Can we invite all of you to please remain on stage for a group picture? And I also remind all of you that this year 2 teams will be moving into the regional rounds like Travis mentioned. So all smiles on stage for the runner-up team. Thank you very much to the presenters and congratulations to the University of Colombo. Now, to the winning team, they walk away with the trophy, a cash prize worth 200,000 rupees, not dollars. Additional internships from our platinum sponsor, the Colombo Stock Exchange. Candidate council membership offer for anyone who would intend to register for the CFA program within the calendar year 2026. And this time 40% of a discount on CFA program level 1 by our education partner, Alpha Business School. And to do the honors, I'd like to invite on stage our guest of honor, Sri Jayewardenepura, Country Head of Equity Analytics, alongside Nilupa Pereira, Chief Regulatory Officer of the Colombo Stock Exchange, and Rashmi Piris Parnavitharna, CFA President, CFA Society, Sri Lanka. With that, we'd also like to invite our chief guest for the evening, Senior Professor Harindra Disabandara, Chairman, Securities and Exchange Commission of Sri Lanka, to join the presenters on stage and hand over in person the trophy to the winners. I hope you're ready for the big reveal, ladies and gentlemen, and the teams. The winning team for the CFA Institute Research Challenge Sri Lanka 2025-26. The University of Kelaniya. A big round of applause, ladies and gentlemen. Winners of the local leg for the years 2025-26. No easy task, of course, winning the CFA Society Research Challenge. And with great pride, they walk up. The team consists of Mohammad Faham, Amani Najumuddin, Lumini Liu, Pujani Bandara, and Situmi Medungoda. Big round of applause. Congratulations. While you remain on stage, I'd like to invite the faculty member whose support has been invaluable, Sandali Sudhasinghe from the University of Kelaniya. We invite you to collect your token of appreciation. And we also invite Savinda Fernando, CFA, the industry mentor for the University of Kelaniya, to collect his token of appreciation. We invite all of you to remain on stage for one group picture. Thank you very much to all the presenters and the team members, industry mentor and faculty member. With that, ladies and gentlemen, we congratulate and conclude this year's edition of the Sri Lanka Research Challenge. Last year it was Winforce, came with a buy recommendation. This year PickMe closes off with a buy recommendation. You know what to buy now, judging by the judges' selection. Thank you and congratulations to all team members, the challenge committee behind who has been invaluable in their efforts and time. Thank you again to everyone present here today. We encourage all of you, for those who haven't participated in the CFA Research Challenge, to participate in the next time around, and we'll see you again for the 20th edition of the CFA Research Challenge. Take care and have a great evening.
So this competition with the CFA Research Challenge is something that I wanted to join since I started my university life, and to get the opportunity to participate, and not only just participate but to win, has been a once in a lifetime opportunity, and to work with the amazing team that I've had has been so good, because we learned a lot more than what we learned in our traditional degree programs. And moreover, the advisors, the guidance that we received from our faculty advisor as well as our industry mentor was so amazing, because it helped us learn a lot on how to improve and how we can get better, and that's why we are here today. More importantly, I would like to thank the CFA Society of Sri Lanka for organizing such a competition that puts us out of our comfort zone. It helps us grow as individuals as we step into the corporate world.